What is up, everyone? I am Derek Vandeliner, and in this video you're going to learn how I use the Fibonacci retracement. Okay. So, here's the thing with the Fibonacci retracement and trading in general. A lot of traders, and I think failing traders' biggest issue is they don't know how to be discretionary within their trading, meaning they don't know how to make the market make common sense. And I'm going to teach you about that later on in this video on what I'm talking about. Because in the market, for me to take a trade, it has to make sense. And I'm going to show you how I can make things make sense within the market using the Fibonacci retracement tool here. So I want to thank you guys for being here. After this video, you should have everything you need to know about how I use the Fibonacci retracement. And I hope you can just take some notes on tips that I give you throughout this video in trading. It kind of gives you a little grasp on trading psychology and just different tips that I have used that I think have helped me be successful within my trading career. So first, what is the Fibonacci retracement tool in Forex? Okay, the Fibonacci retracement levels are horizontal lines that indicate where support and resistance are likely to occur, okay? So they are based on the Fibonacci numbers. Each level is associated with a percentage. The percentage is how much of a prior move the price has retraced. So I use Fibonacci for extra confirmations in my trades. On occasions, I will use the Fibonacci tool for my stop loss and take profit, but you'll learn about that in the stop loss and take profit videos, okay? So in this video, I'm just gonna simply show you how I can get an extra confluence with my trade setups using the Fibonacci retracement tool. So we have the Fibonacci levels. The Fibonacci retracement levels stem from Fibonacci sequence, a mathematical formula that originated in the 13th century. In technical analysis, Fibonacci retracement levels indicate key areas where a currency pair may reverse or stall. So these levels are actually seen everywhere throughout the universe in the world. So they actually play an important part within trading and how or where the market may reverse. But if you ever want to learn more about Fibonacci, I would highly suggest that you do a little research on it. It's kind of fun. But the common ratios within the Fibonacci are 23.6, 38.2, 50%, 61.8, and 78.6, among others. Usually, these will occur between a high and low point for a currency pair, designed to predict future direction of the price movement. So I use every one of those levels in my trading that I just said above, okay? So a Fibonacci retracement in a downtrend, in a bearish market, when placing my Fibonacci retracement in a downtrend, I will typically place my Fibonacci retracement from the nearest previous high retracement. So what that means is if the market is in a downtrend and we're continuing to make lower highs, the first lower high previous to me is where I'm going to place the top of my Fibonacci 90% of the time, I would say, okay? So in instances where there's not a clear answer to that Fibonacci level, so maybe the retracement isn't that great of a retracement, or it's ugly, or something happened, I will look for the next high level and put my Fibonacci right there. And if it makes more sense doing that, and it gives me a confluence in the market, then I go by what the Fibonacci says in that aspect, okay? And I'm gonna show you examples right here. So in this example, since this is our nearest retracement right here, I'm gonna place my Fibonacci at the previous high right here, which is right here. And then here's the previous, or the previous low, obviously. So this is the low, and that's where I'm gonna place at the next previous high, or the previous high right here, and to the previous low. As you can see, I have the numbers marked off right here. We have a 38.2, a 50 level, 61.8, and 78.6. And all those levels are very important. Now, when our trades line up with this level, like the 38.2, 50, 61.8, and the 78.6, if it lines up and gives us an extra area of confluence, that makes me more confident in that trade. Okay, so right here we have hidden divergence. We're on the 50 moving average. I don't know by looking left because I don't have enough data to see if it is a support turned resistance or anything like that. But I do know, just based on hidden divergence 38.2 and probably a trend line as well, that the market should reverse at this level right here. And as you can see, it reversed perfectly right off that 50 moving average. Also right off that 38.2. Okay, so in this example, this is where we got to be discretionary within our trading. Not everything is straight by the book. Okay. So as you can see here, this is where the market opened actually. And this is why the market looks weird, because we have this major gap. So market closed on Friday afternoon at this level. It opened back up with a major gap right here, and then went right back to where it closed on Friday. And then as you can see, it closed this gap right here. And that is what happened within this trade. So if I were to place my Fibonacci retracement tool at this previous retracement right here, it didn't really make sense within this trade. You're going to learn about this in a couple slides, but it didn't make sense in that aspect. But what it did make sense in is if I were to place it at the next previous high right here, and then on that 50 moving average, we have a 38.2 with a trend line, and life is good. Easy trade right there. Now, as you can see, the market rejected 38.2. Easy move right there, okay? But let's go over what you would do if you tried putting the Fibonacci retracement at this previous high right here. This little weird retracement. And this is, like I said, you got to be discretionary within it. This one's not necessarily it's not necessarily terrible, but it just does not look very clean at all. So if I were to place my Fibonacci retracement right here, as you can see on the 38.2 where I would take this trade, as you can see, it just doesn't line up. If I were to place it right here to right here, it just doesn't line up. But now let's look right here. It rejected that 50 level, as well as it would have rejected the 38.2 if I kept it right here. So let's go back here. This is, to me, this looks much cleaner right off this level, off the 38.2, than if I were to place my Fibonacci at the top right there. And you just got to be smart with your trading, and you got to be discretionary with it. If something makes better sense, then use that. If it lines up and is common sense, I think people just need to have more common sense within trading. If it makes sense, then that's what you want to see. So if we have all these other confluences with the Fibonacci lining up, then that makes sense, okay? But if we have all these other confluences and I put my Fibonacci right here and it doesn't go to a level that makes sense, then I'm going to just mess around with it and see if I place my Fibonacci at the previous high right here. And if that makes sense, that just gives me another confluence in that trade, okay? Now, as you can see, both worked out. On this level right here, it rejected the 50 level, also a support turned resistance. So both worked out, but I like to see more of a clear picture, like when I place my Fibonacci at the top right there. Now we have Fibonacci retracement in an uptrend in a bullish market. When I place my Fibonacci retracement in an uptrend, I'll typically place my Fibonacci retracement at the nearest previous low to the previous high, okay? So the nearest previous low has to be a clear retracement, like in that first example. In instances where there's not a clear answer to the Fibonacci level, I'll go to the nearest previous low above the nearest previous low, okay? So that was kind of a lot right there, but let me just show you an example. So as you can see, this is obviously a clear retracement right here. Now it rejected off this level, off the 50 moving average right in here and made its high. So this, with this clear retracement right here, this is where I'm going to place my Fibonacci at the bottom of this retracement level. Now I'm going to place the other part, or the top right here. And as you can see on the 50 moving average, we have a perfect 50 level rejection on our Fibonacci, okay? So let's watch how this plays out. So it's not actually like the most clear move. Normally when I'll get in a hidden divergence move, it doesn't really mess around as much as it did right here. But this level, this support level in here, or this resistance now turns support level in here, held very strong, and our trade ended up working out right off that 50 level right there. So if you can see, within our strategy, our take profit would be the clearest, or the previous high right here. You're going to learn about that more in the take profit video. But this is exactly how I'd mark out my Fibonacci retracement in this scenario. Now, this is another discretionary trading setup where this doesn't make sense to me. We're on the 50 moving average right here, and we're on the 50 level. But typically when I am setting up my trade and the trade really works out, it will be a perfect matchup from the 50 moving average to one of these levels. It kind of just depends on the swing. But this one doesn't make very clear sense to me. It doesn't line up really well at all. So in that case, I'm going to mess around with it more. I'm going to place it at the next previous low right here. Now, let's look exactly to see how this lined up right here. So we place our Fibonacci at the nearest previous low, or the previous low that makes sense. And then I place it at the high right here. Now, as you can see, it's a perfect 38.2 level, as well as we have a perfect trend line right here. That all makes sense. And as well, it's hidden divergence. Just so many different confluences in this trade, especially using the Fibonacci this way. So that's exactly what I do. I'm so discretionary with every aspect of my trading. And I think that's the biggest things traders have issues with, that should be successful traders, but just aren't, because they're not being discretionary and being smart within the market. If the market's telling me that I'm in a trade, I'm not going to be married to that trade and not close out because it hasn't hit my take profit yet. If there's something telling me that I should not be in that trade because the market's going to end up going against me, I'm going to take my profit and run. And it happens to me, you know, not always, but definitely not always, but it will happen to me every once in a while, you know, where I just got to be smart with the trade. And if I'm smart with my trade, either A, I can place my stop loss and profit and let it hit my stop loss and profit, or I can just protect my profits that I'm currently at and exit the trade right there. It's kind of up to you. And within those videos where you'll learn how I take profit and learn how to manage my trade, you're going to learn a lot more about that. And I think that's a huge part within how you're going to be successful within this strategy, okay? So what we have here is we're on GBP CHF. We're on the 4-hour time frame. And I just want to show you how I would mark up the Fibonacci retracement in this scenario right here. So let's pull up the Fibonacci retracement right here. And I am going to play it from this area because this area is a nice hidden divergence move right off the 50 moving average like we like to use, okay? So if I was placing my Fibonacci in this scenario, I'm going to use this low right here as our nearest previous retracement. Now, it's not the best. It's not the biggest retracement, but if it makes sense and this gives us a clear confluence in our trade, then I use this as our previous retracement, okay? So I place my Fibonacci from the previous low to the previous high, and I make sure that it's perfect. I want to be right perfect right here. So as you can see, let me zoom in for you guys. As you can see, it's perfectly on the bottom right there, perfectly on the top. Now, on the 50 moving average, we have a perfect 50 level Fibonacci retracement. And that's exactly what I want to see. Now, with this hidden divergence right here, that just gives us that extra area of confluence. We probably have a trend line in here as well. But in this video, I'm just showing you how to place the Fibonacci retracement. So, giving us that we have this 50 Fibonacci level, what we will see is we'll see the market reject off this area right here. And we would have our take profit be around this area. Let me pull up the, I don't even know where it is. Let me pull up the horizontal line. I would place my take profit right here. I don't know. I normally have a box with all my stuff right here. I can't find it right now. Very weird. But I place my take profit right here. And let's just watch to see how the market plays out in this instance. So perfect right there. And actually, we could have put our stop. We would have put our stop loss in profit. And we could have had our take profit right here. But because this is a rejection area, that is where I would have placed my take profit right there. And it would have obviously hit perfectly. So that's how I place my Fibonacci retracement in a bullish move. Let's see if we can figure out one in a bearish market right here. And let's just use this for an example right here. Now, let me replay this. We'll go back to this level. Now, I know this isn't one of the moves that I teach. It is, but it's not a perfect move right here. But in this instance, I would use this move right here as the previous high, like right here. So I'll place the previous high to the previous low. And as you can see, and this is where I would take the trade. I would take the trade directly off the 50 moving average. Okay, so that is where I would take the trade. Now, if it doesn't hit that level, if it doesn't hit the 78.6, then I'm not in that trade. That's just how it is for me. It has to do a certain thing for me to be in the trade. So that is how I would place my Fibonacci retracement in that aspect right there. This gives us a clear enough retracement. I'm going to place the top of the Fibonacci retracement at the previous high right here to the previous low. And if it comes to the 50 moving average, it's a perfect 78.6. Now, in this case, it didn't. And this will happen sometimes. It happens on occasion. And what this is right here, I bet you money that we have a trend line retracement right throughout here. Let me just see if we can pull it up and find out why that didn't hit perfectly on our 50 moving average. So I'm going to place my trend line right here and see if it's giving us an example of why. And as you can see, it is. It's giving us a very clear answer to why it did not touch that 50 moving average perfectly off the 78.6. It's because we had a trend line retracement move right here, and it wicked off almost off the 200 moving average, which is this aqua line. But that's how I place my Fibonacci retracement, and that's as easy as it is. Now, like I said in the first part of the course, if this didn't line up to where I wanted it to line up, then I'm going to play around and see what the next Fibonacci or the next, retracement is telling me. Now, in this case, it's telling me a 50 level at that, but the 78.6 is what I wanted to see, okay? It didn't hit that level and it continued to drop right there. So that's how I do my Fibonacci retracement. It's very simple, very straightforward. You shouldn't have any issues with it. Just play around with it. If the trade doesn't make sense, see if you can make it make sense. If you have other confluences, you don't want to force anything. But if there's something that's telling us that, hey, we can add this as an area of confluence and it makes sense and it's a retracement, a clear retracement like that, then you can use that. And I do it all the time. It doesn't have to be straightforward, perfect all the time. And I think that's a thing that a lot of traders need to realize. But anyways, I hope you guys learned a ton throughout this video. I hope that you're getting more of a grasp on what we're looking at in the charts. Now, as you can see in this last example right here, I can tell so many different things. Like I haven't even looked at this chart right here, but I pulled this up and showed you the trend line retracement on why exactly it didn't come up to the certain level that I wanted it to. Now, I would have been taking note in that if I were looking for this trade right here. But in this instance, how I trade, I would have had to have it come up to that 50 moving average, touch that 78.6 to take that trade. But the reason it didn't work out is because that trend line retest right there. Simple as that, and life goes on, okay? So that's that. If you like this video, please comment below. Please subscribe to my channel. There's a lot of people that are watching my videos but not subscribed, so please subscribe. I'm going to be doing a ton of stuff. We have some really cool things lined up in the future. I'm going to be funding traders. We're going to be doing a little trading floor. We're going to be having a lot of fun, okay? I'm telling you that by the end of 2021, Trader Society is going to have a lot. And we're going to make a big wave in this industry. And we're going to just make profitable traders. That's my goal. People to live off trading. And I definitely think we can do it. We already have people that are sending me messages that are killing it already. So I'm very stoked about that. And in this next video, you're going to be learning about Fibonacci extension, which we use within our take profit and stop loss at times. Okay, so again, if you like this video, please comment, smash that like button, and we're gonna see you in that next video.
Be pulling up. Remember they said I'm not good enough. I took all the energy, turned it to greatness. Now look at my life, man, it's looking amazing.